Let us continue with advanced ruling, also known as AAR, Advanced Ruling Authority, Authority for Advanced Ruling. Now please understand, this lecture is one of the important lecture because many procedural aspect and fees we are going to learn here. Before I can go into the fees, I wanted to tell you one thing. Earlier, the fees for application was rupees only 10,000. And because fees was only 10,000, what assessee used to do, assessees are very smart, and it is one of the tax planning that I am trying to tell you. If an organization X INC requires advanced ruling, or actually X is the original assessee which wanted to enter into India, X will not apply. X will ask A to apply. On the similar facts, they will create whole project report, dummy project report, and they will make an application to Government of India. And then Government of India will give the taxation ruling. If ruling is in favor of A, then it is good to go. If it is not in the favor of A, then they will change the facts and they will ask B to apply. You understand? If B get the favorable ruling from the department, then they will accept. If not, then they will again change the fact and they will ask C to apply. So what they are actually doing, because the fees is very low, only 10,000 rupees, they are asking multiple non-residents to make an application and get a ruling. Once the final ruling is available with a C, now the X INC with the exactly same fact or some modifications will be done, and then X INC will come, and because AR has given a similar judgment recently, they will also give the similar judgment to the X INC. Sometime even they might be knowing that this was the game, but what can do? This guy is playing very well, and there is nothing in the law which prevent this. You can make multiple application on multiple people's name. Nobody is stopping you from making an application. To reduce this to some extent, what Mr. Arun Jaitley sir has done, excellent. Arun Jaitley sir has increased fees in lakhs. Now the fees is not 10,000 rupees. Now fees he has to pay in lakhs. You wanted to play with government, you play, but the cost of play is a little high in this case. Let's look at that. Application. Without application, obviously it will not happen. Provide that applicant desires to obtain an advance ruling may make an application stating the question on which the advance ruling is sought in the prescribed form and in prescribed manner. And earlier the fees was only 10,000, or the notified fees, whichever is higher he has to pay. Rule 44E provide that particular fees structure. Let's look at the fee structure. An applicant who is referred in section 245 NB 1, 2 and 2A. One was about non-resident, second was about resident in respect of the non-resident, and 2A was notified resident or resident who is notified, who is having transaction value exceeding 100 crore. I hope you remember these three people. Okay. Amount of 1 crore, one or more transaction entered into or proposed to be undertaken in respect of which does not exceed 100 crore. Up to 100 crore. It can be 5 crore, 10 crore, 20 crore, 8 crore, any. Does not exceed 100 crore. Then the fees is 2 lakh rupees. Earlier it was 10,000. Now with the amendment, the fees is 2 lakh rupees. You have to remember this. A very good amount of fees we are charging. Sir, if a transaction value is going to exceed 100 crore, but does not exceed 300 crore, 100 crore to 300 crore, then the fees will be 5 lakh rupees. Just the application fee. And if a transaction value in aggregate exceeds 300 crore, then the fees is 10 lakh. And let me tell you, the case usually falls in this criteria, because the way we are talking about applicant, Google and then Facebook and Apple or Honda or Hyundai or any foreign company for that matter, when they come to India, they are not coming to India for 100 crore and 200 crore transaction. They come to India for thousands of crore transaction, and therefore usually the most probable fee or most applicable fee will be 10 lakh rupees. That's how he has reduced the useless applications to some extent. So what about any other case? Any other case means public sector undertaking whose case was pending, do you remember? Or somebody who wanted to check whether the transaction is impermissible arrangement or not. That is GAR provision. For them the fees is only 10,000. They are Indian people, so it's okay. Okay. So it has to be in a prescribed form. We don't have to remember the form. Every applicant has to be with a submitted with a proof of payment of the fees. That means the challan should be submitted, or at least the reference number of challan should be given. So this is very important question that you have to ask yourself. and you have to compare this question again with the question of from settlement commission. You must be knowing that once we go into the settlement commission, you cannot come out. Once application made, cannot be withdrawn. But authority of advance ruling says, okay, in AAR you can apply and you can withdraw the application, and that withdrawal can happen within 30 days from the date of application. Very important. The next question should come to your mind. So that means after 30 days application cannot be withdrawn. The primary answer is yes, but we are having a case law where it is the power of AAR to allow assessees. If somebody has paid 10 lakh rupees to you and he doesn't wish to continue the business and he doesn't want to come to India for any other reason, he don't want your ruling anymore, then you cannot stop him, no? If somebody doesn't want to do a business, let him go. So it is the power of advance ruling authority to exclude that person even after 30 days. Please understand that. That is very, very important note. So by law, yes, application can be withdrawn within 30 days. It cannot be withdrawn after 30 days. However, the authority for advance ruling in the case of MK Jain has observed that though the section 245Q provides that the application may be withdrawn by the applicant within 30 days from the date of application, this however does not preclude means exclude, the AR from permitting withdrawal of the application even after the said period with the permission of AR if the circumstances of the case so justify. Obviously, while withdrawing, they will ask why are you not continuing with the proceedings and all. So discussion happen, and because we can trust the brain of AR, so many experienced people have sat there. So whatever judgment they are taking, if they are allowing to withdraw the application, then we must accept that, isn't it? Section 245R, procedure on a receipt of the application. This is also little important. What are the procedures? Step 1, step 2, you know that. We have done that in settlement commission also. Authority on a receipt of application will send a copy to Principal Chief Commissioner of Income Tax or Commissioner of Income Tax concerned, whether and wherever considered necessary, also they will call upon Principal Chief Commissioner and CIT to furnish the relevant record. Such records will be returned to PCIT and CIT as soon as possible. So if certain things are going on about the assessee, if they wanted to conduct some inquiries with PCIT, they can call them and they can discuss. The authority may either allow or reject the application. Obviously, after looking into application, it's not that every application has to be accepted. You may accept or you may reject the application. However, this is mandatory rejection. Okay, mandatory rejection, and this is very, very important. You should remember mandatory rejection. 3 cases of mandatory rejection. However, authority shall not allow mandatory force. And any application question raised on application is pending with income tax authorities or tribunal or court. When matter is already pending, when you have entered into a matter, when already transaction was executed, court have already taken up the case, then why do you want advance ruling? No, it is no more advance ruling. Now ask court to give the judgment, and that judgment will applicable to you. We are not going to waste time of advance ruling. But this particular clause is having one exception. I hope you can catch that exception. This clause is having one exception. I have taught you that exception in last lecture, and that is public sector undertaking. Please understand, that is public sector undertaking. Is already before any authority. However, resident falling in the class of category of a person notified by the central government, that is the public sector undertaking, can seek for advance ruling even if the question is raised pending before income tax authority. So why they have allowed public sector undertaking? Because beta, it is the government entity. They are giving the relaxation to government entity. Next one, determination of fair market value. You cannot go to AR for determining fair market value. You are having valuation authorities for that. You go to valuer. Second is again important. First was if matter is pending before authority, tribunal or court. Second is, sir, if to determine the fair market value, if your application is in relation to valuation of shares, valuation of asset, or valuation of any other matter, obviously AR is not an authority. Next one, third one. So transaction is designed for avoidance of income tax. You have structured a transaction in such a beautiful manner that India will lose the tax revenue definitely. And you want to go to AR and just make sure that is it a valid transaction or is it a valid tax avoidance mechanism? Obviously department will not allow that. So they are saying if your transaction is having sole intention to avoid tax in India, obviously we will not give any ruling on that. But here also we are having one exception, and that is public sector undertaking. You can understand. So public sector undertaking can apply and can seek for the explanation where they are actually doing a tax planning and they are going and checking with AR, is it a right tax planning or not. Okay, so it relates to a transaction or issue it designed prima facie for avoidance of income tax, except in case of resident applicant falling within the class or category of a person notified by the central government, that is public sector undertaking. So these people can go, or in case of a resident or non-resident determining whether the arrangement which is proposed to be undertaken is impermissible avoidance arrangement. Whether it is IAA, that question you can definitely ask, because that is something you don't want to fall into. You don't want to pay penalties of GAR. It's very heavy penalties. However, no application shall be rejected. Obviously, you know that rejection means assessee will agree to it. So before rejecting, you have to give him a reasonable opportunity of being heard. Unless an opportunity of being heard is given to the applicant. Further, where an application is rejected, the reason for rejection shall be given in order, and copy of every order shall be sent to the applicant and the PCCIT and CIT. Let me tell you one thing, order passed by AR is full and final. You cannot file appeal against that particular order. Where an application is allowed, the authority would pronounce its advance ruling on that question specified in the applicant after examining such further material as the case may be placed before by the applicant or obtained from by the authority. So authority before giving you final ruling, they will conduct their own inquiry, they will do their own research, they will listen to you, and then only they will give final ruling. It may be in your favor, may not be in your favor. An applicant on a request can appear either in person or can be represented through a duly authorized representative. Applicant can go, but obviously if the company is in foreign, they will not come and represent. They will appoint some Indian tax professionals to go and represent the case. So this is again very important time limit you have to remember. They cannot take endless time to give the ruling. They cannot take 2 years, 3 years, 4 years like the court takes usually time in India, because the NR is proposing to enter into India for conducting a business. The judgment has to be given as soon as possible, and that is within maximum 6 months from the receipt of application. So 6 months is the time limit that you should remember. Income tax appellate authority not to proceed in a certain cases. No income tax authority or appellate tribunal shall proceed to decide any issue in respect of which application has been made by the applicant. The public sector undertaking, once the application is made, obviously they should drop the proceeding. They should put a stay on the proceeding, because they will listen to the AR first and then they can continue. Sir, applicability of advance ruling. This is also very important aspect of advance ruling. Advance ruling is applicable to whom? Sir, Ram and Sham are brothers. Both are doing the same business. Both are into garment business. Ram has taken the AR. Can the same is applicable to Sham? Answer is no. Can Ram apply the advance ruling for T1? He has taken for T1. Can he apply in T2? Answer is no. That means the applicability is for the same person for the same transaction. Please remember these two keywords: same person, same transaction. The advance ruling is binding only and only on first applicant who had sought it. This is the first part. And second part, in respect of the specific transaction in relation to which it was sought. Okay. And on CIT also, it is also binding on CIT, PCIT, and the income tax authority subordinate to PCIT or CIT in respect of the applicant and the said transaction. The advance ruling will continue to remain in force unless there is a change in the law. Obviously, if the law is amended, then advance ruling has to change. Or in fact, if you change the business or business model, then also we have to change the advance ruling. The fact and law should remain constant, then only advance ruling will be valid for the declared amount of time. Advance ruling to be void in certain circumstances. Very, very important. Advance ruling will be void in certain circumstances means if you have lied to income tax department while getting the approval, if you have hidden some certain facts and you are playing with the department, that means fraud and misrepresentation, F and M. If you have obtained advance ruling by doing fraud and misrepresentation, then once it is revealed, please understand, department have power, AR having power to declare your ruling as invalid from a beginning. We call it void ab initio. And once it is invalid, normal income tax provisions will apply to you. Okay. Where authority finds on a representation made by the PCIT or otherwise, anyhow, there are various rules through which they come to know that an advance ruling has been obtained by the applicant by a fraud or misrepresentation of the fact, the authority may by order declare such ruling void ab initio. They have to pass an order. Okay, they cannot just say it, they have to pass a legitimate order. The provisions of the act shall apply. Obviously, after this, normal provisions will apply, excluding the period beginning with the date of such advance ruling and ending on the date when ending with the date of the order under this section to the applicant, as if the advance ruling had never been made. So we will assume that advance ruling was not applicable. Okay. A copy of order shall be sent to the applicant and PCIT. So these are the procedures that we have discussed about advance ruling. Theory is almost done. Now we will understand advance ruling through Q&A session in coming lectures. Thank you.